So the way that I explain it to people is that when you trade, you're looking to generate income. When you invest, you're looking to build wealth. And the biggest difference is your time horizon. Now, trading is a lot more frequent. Trading is, you can either be a day trader or a swing trader. Now, a day trader, you're going to buy today and you're going to sell today. A swing trader is you're going to buy today and maybe you sell tomorrow or a couple days or a couple weeks later. Investing, you're buying today and you're holding for many years. So the biggest difference is going to be your time horizons. And I say trade for income, invest to build wealth. And the idea here is that you invest in high quality companies whose stocks are not going to end up going to zero, right? Like Apple, Microsoft, Nvidia, Tesla. These stocks are not going to go to zero. So whatever amount of money that you invest into these companies, you're not risking that full amount. So if you decided, hey, I want to put $10,000 into, these stocks, you don't have the potential of losing $10,000 if you are investing for the long term in top quality companies. But if you were to put $10,000 into a trading account, you do have the potential of losing the full $10,000. So whatever the amount of money is that you're going to trade with, make sure that it's a dollar amount that if you lost all of it, you would be totally okay. Your life is not going to change. But what you invest, that's your nest egg, right? Don't take your investments and put them into these like random high flyer, YOLO, super high risk type of trades where, could you make 500%? Yes. But could you lose 98%? Also, yes. Use that for the trading stuff. If you want to take risk, take it with the trading stuff. Your investments and your long-term portfolio needs to be a lot more conservative, and because that's your nest egg, right? That's how you're going to build wealth over time for you and your family. And those are the biggest differences between trading and investing. I recommend that you keep them completely separate. Like I do my trading, which is where we try to generate income. I do that in Lightspeed. Lightspeed is the broker that I use. So if you use E-Trade or Thinkorswim or Charles Schwab or Webull or Robinhood, that's going to be for your trading. Then I would recommend having a separate account for your long-term investments so that when you log into your account every day, you're not looking at both. You don't want to log in to trade and you looking at your long-term portfolio is up or down. Because if the market's up big one day, you're going to come be like, wow, look, I'm up thousands of dollars in my long-term portfolio. This is great. So what happens is you end up trading a lot less risk adverse, right? You lose all risk management. You're like, oh, I'm up $5,000 today with your long-term portfolio. So if you lose $3,000, you're like, oh, I'm still up $2,000. No, you're not. You lost $3,000. All you're doing is eating into all of the profit that you should be generating in your long-term portfolio. And then vice versa. If the markets are down big one day, you log into your long-term portfolio and you say, oh my God, I'm down $5,000. Oh my God, what do I do? What do I do? You're going to freeze. You're going to miss all these trading opportunities that are out there. You're not going to short anything. You're not going to be going long anything. You're just going to be frozen like a deer in headlights at the money that you're down in the long-term portfolio, when in reality, it's meaningless that you're down that in this one day, because in a year, 3 years, 5 years, 7 years, 10 years, you're going to be up money on it. So separate the two, keep them in. I have my long-term portfolio. The majority of my money is with JP Morgan's wealth management division. I also have some money with Fidelity. And that's my advice to people that are trying to figure out the difference between trading and investing.